Welcome, everyone. We've got another option of the day video to share with you. It is Thursday, March 9th, 2023. And so what we have here for you today is a look at Visa. And to help us walk through it, I'm Justin Nielsen, and I'm joined by Harold Morris, who is a senior product coach. He'll be sharing some details on how to structure a bull put spread for Visa. So let's go ahead and start by pulling up MarketSmith and kind of getting a sense of what's happening with the chart action on Visa. Now, the first thing that jumps out at me on this one, Harold, is man, this January 24th was a very wild day. We're kind of discounting that. That was because there was a glitch on the New York Stock Exchange. And so it really destroyed a lot of charts for stocks that appear on the New York Stock Exchange. So we're going to ignore that part. But other than that, this is looking like it's something that is getting support at the 50-day moving average line. It's still above its 200-day moving average line, and had a little pullback, and looks like it's gotten back up to the 21-day moving average line briefly, kind of like the market did, and then it got another level of support at that 50-day line. So Harold, let's start with what is it that you're looking at in terms of your goal for setting up a option trade on Visa?
Yeah, so first off, what attracted me to this chart was the support at the 50-day. That's one of the things I'm looking for in the market is the support at a major moving average. And breakouts don't seem to be working as well as they
Mhm.
were as they were at the beginning of the year. So looking for stocks that are finding support at a 50-day moving average. So if we go to the option chain, I'll show you what we'll look at as far as structuring a bull put spread. A bull put spread is a bullish option trade. So here we're looking at the option chain for Visa. So I've got Visa here, and I'm going to go out to the April expiration. So we're looking at 43 days out. I'm
Mhm.
looking at the monthlies here. You have weeklies and monthly. Looking at the monthlies. So I click on that to expand it. And you may have noticed normally I have just a single strikes, but I went up here, changed it to vertical, makes it a little bit easier. So I'm going to go down here and I'm just going to click on the 220, 215 there. So I'm going to click on that and it places my trade here in the trade setup. So again, so what I'm going to do here is I'm going to sell the 220 strike. So you can sell the 220 strike and I'm going to buy the 215. I call that's my protection. And that's going
Mhm.
to give us a credit. Now the credit has increased, but I'm going to lower this number here because I have some math I'm going to show you as to what our probabilities are for this trade here. So I'm going to lower this number to 145 just to match the math I have set up. So assuming, and again, this is all theoretical. So let's assume that we're going to get $1.45 credit. And then let's take a look at the numbers here. So I'm going to click on confirm and send. First thing I like to look at is our break even. That's one of the things I like about vertical spreads.
Mhm.
If the market moves sideways, you can make money. If it declines a little bit, you can make a little money, make some money also. So our break even is at 218.55. The stock is trading at around 222.56. So I like when my break even is below where the stock is trading. And of course, the max profit is going to be the credit receipt. Now, let's say you're satisfied with the numbers that you see here. So next thing we're going to look at what is our probability of success with this trade and how much capital do we want to commit to this trade. So
Mhm.
let me do this. I'm going to click on edit here and then I've got some notes here on the right side here. So first thing we're going to do is we're going to look at the probability of success. And to calculate that, we're going to take the width of the spread, which we know is $5. It's just the difference between the strikes. The width of the spread minus the credit received, which is $1.45. And that's going to give us our actual risk of $3.55. So that's our actual risk in this trade. To
And of course, we're
calculate,
multiplying all these numbers by 100 because there's 100 shares per contract. So it's really $355 per
exactly.
contract. Yeah. Mhm.
Right, right. Okay. And then to calculate the probability of success, we take the 355 or $355 divided by the width of the spread, multiply that by 100. That's going to give us a 70% probability of success. And that
Mhm.
probability of success, the definition is this trade making 1 penny or more. So we could just make 1 penny, but hey, that would be a profit.
It's not
Now,
losing
how
money.
many? Exactly.
Yeah.
All right. So based on that, okay, how many contracts do I want to buy? Let's say I want to commit $2,500 to this trade. So I just take that $2,500 and divide it by the actual risk, which is $355. That's going to give me an actual number of 7.04. So 7 contracts. So let's go down here into the trade setup, and I'm just going to change that number to 7. Now let's
Mhm.
take a look again at the numbers here. So I'm going to click on confirm and send. So again, we have the break even. Here's our max profit, and you can see there. So the actual number is not going to be exactly 2,500, but it's going to be pretty close here.
Yeah,
So
you did have
I'm
a
satisfied.
7.04 contract, so
Right,
that's where the difference comes in. And just to be clear, that $2,500 that you're saying that you're committing to the trade, it's really kind of, this is the most I'm willing to lose on this
right,
idea, right?
right, right.
Hmm.
So we always think risk first.
Hmm.
All right, and then
Yeah.
we just click on confirm and send. That sends a trade off, and hopefully this trade will work in our favor.
Hmm. So just to kind of recap a few things here. So you're starting really with the selling of the put and that level that you're deciding on. First of all, there's the strike price, and you kind of said, hey, 220. This is a level that looks like the Visa stock is getting support at that level. So that kind of is where you start. And then also, let's talk a little bit about the expiration date that you chose. You chose something that's 43 days out. Do you have a preference here, especially when you're receiving a credit? The volatility and the time value can really jump down a cliff, and get a lot. In the last 30 days it just gets down so much. So much value gets lost with the premium on this, and this is a credit. So do you like having it in the shorter time frame to take advantage of that time value loss?
Yeah, yes. I like to go with these trades 45 to 60 days out.
Hmm.
That's for me, that's my sweet spot. Now, in most cases, I'm not going to hold it to expiration. I'm going to be
Hmm.
looking to manage this trade. I like to look at around 20 to 21 days prior to the expiration before I say, okay, what do I want to do to this trade? Do I want to let it continue? Maybe I'm close to my max profit, or is the trade, maybe the trade is not working out, then I could just say, I'm just going to get out of the trade now and move on to something else. So when we get down to 21 days to expiration, that's when I'm going to take a hard look at the stock and see what I want to do with it. Or if it's profitable right away, I might just close the trade out, take the money and run and look for something else.
Yeah. And then as a reminder, look, if this goes against you, and that means that the stock goes down, once it goes below 215, at expiration, your risk is no longer increasing. It's kind of capped. That long put really kind of offers you protection. So no matter how far down Visa goes, you're not going to lose any more than you would once it goes past that 215.
All right.
Yeah, very good. Well, thank you for sharing the details on this, Harold. We really appreciate it. For more information on options, of course, there's a few places you can look. You can always go to investors.com, and we have a whole options section that you can look at, where we come up with new ideas every day for you. We also have a brand new Option Traders app, so you can get that from the App Store. You just type in Option Trader by IBD and download that. We've got a lot of information, including educational materials, different ideas, strategies. So a lot of information to look at there, including some of these videos that you see right now. So thank you for joining us, and we will see you next time.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.